Hi, this is Elliot Eisenberg of Graphs and Laughs here to catch you up to date on the latest in residential sales data for the month of July. For the month of July in Hillsborough County, single-fam home prices were flat like a pancake. That was the best performance across all three counties in both types of properties. Multifam prices slid 1.7% year over year. That was the best multifam performance across all three counties, clearly a weak housing market. Sales activity slid 7.6% on the single fam side and only 5.4% on the multifam side, and that was the best performance for multifam properties across all three counties. Sales price as a percentage of list price continued to decline, and it fell by about 1 percentage point for both single and multi. On the single family side, it's down to 96.4, and on the multifam side, it's down to 94.4. Pending sales also slid, just 4.4 on the single fam side and a larger 15.4% on the multifam side, but multifam slid in the double digits across all three counties. Lastly, inventory continued in its inexorable rise. It's now at 4.2 months compared to 3.4 months a year ago on single family. And for the multifamily side, it's 5.9 months, larger obviously, up from 4.5 a year ago. In Pasco County, single-fam home prices slipped 2.3% and multifam prices slipped a meaty 12.1%. Sales activity barely declined on the single-fam side, slightly less than 1%. On the multifam side, it slid a substantial 24.5%. But again, multifam is pretty mercurial from month to month and year to year based on new construction activity. Sales price as a percentage of list price was unchanged on the single family side. That was the best performance across all three counties in both types of properties, and it was the highest actual percentage at 96.6. On the multifam side, it slid to 95.9, but that was the best multifam sales price as a percentage of list price. Pending sales were up 0.4 of a point on the single fam side, but down a more substantial 26% on the mercurial multifamily slide. And inventory, like everywhere else, continued to increase. Here in Pasco, it's at 4 months, up from 3.4 a year ago on the single family side, and it's at 4.7, up from 3.6 months a year ago. In Pinellas County, single-family home prices slipped 8.4. That was the worst single-fam performance across all three counties. And multifam slipped almost twice as much, 16.7%. That was the worst multifam performance. By contrast, sales activity jumped 4.4% year over year. This was the only type of property where we saw an increase in sales activity year over year across all three counties and both types of properties. Multifam sales activity declined slightly more than 25%. Sales price as a percentage of list price continued to decline. It's just 93.3% on the single fam side, the weakest single fam number, and 90.9% on the multifam, the weakest multifam number. There were deals to be had here in Pinellas, clearly on the multifam side in particular. Pending sales activity is pretty strong. It jumped 6.9% up year over year, and that was the best performance across all three counties and both types of properties. Multifam pending sales activity slipped 13.6, but that was the best multifam performance across all three counties. Lastly, inventories continue to rise. They're at 4.8 months on the single fam side, up an entire month from a year ago. And on the multifam side, they're growing faster. They're at 8.5 months, a very high number, up from 6.1 months a year ago. Looking at the national economy, GDP in Q1 was negative 0.5% as imports rose dramatically as we were front-running tariffs. In Q2, GDP was really strong, 3.3%, because there were no imports. So both of those numbers were really banging around because of tariffs. Q3 is likely to come in between 1 and 1.5%, which is historically weak. And you would think that with weak GDP growth, you would have weak inflation. But that's not the case. Because of tariffs, inflation is slowly increasing. It never got down to 2%, the Fed's desired level. It was higher than that, about 2.4, 2.5. And now it's beginning to go up. And you hear CEOs talk about raising costs, selling prices higher to recapture the cost of tariffs they've got. So the inflation's going up. But at the same time, weak growth tends to result in higher unemployment. And we don't see unemployment number going up. It's still at 4.2, which is pretty low. we're starting to see all the underpinnings in the labor market weakening. Job growth and hiring rates are really, really weak. So the Fed's got a problem. On one hand, they see inflation getting worse, and they see unemployment and the labor market getting worse. If they attack the labor market by lowering rates, inflation takes off. If they attack inflation by raising rates, unemployment takes off. They're damned if they do, they're damned if they don't. They got a problem on their hands. And that's why they've been waiting so long. I expect them to cut rates in September when they meet. They meet every 6 weeks because the fear of the unemployment rising is going to be more important than the inflation rising, assuming inflation doesn't get out of hand. And if inflation stays controlled, if you will, and well anchored, inflation expectations, future numbers, remain pretty well under control, the Fed will cut again before the year is out. The problem that we face is that the long-term bond, the 10-year bond, the long rate, hasn't moved one drip, even though short-term rates are going to fall by a quarter point or 25 basis points. And that's because tariffs are going to raise inflation down the road, and investors want compensation for that. And of late, there's fear of a loss of independence by the central bank or the Fed. And we know that historically, when that happens, inflation numbers get worse. So even though the short-term rate's coming down, long-term rates are anchored and really aren't moving anywhere. If we look at the national housing economy, it's really going absolutely nowhere. We've been now selling 4 million homes annualized, seasonally adjusted, since the middle of 22, and we've now had 4 straight months of month-over-month price declines. And I expect that by the end of the year, we'll see price declines across the nation, and not just in Florida and Texas and Arizona and other states and wherever it is. But I think the weakness in the housing market continues, and prices will begin to decline in more states. If we look at the state economy here in Florida, it's doing really well. Job growth is good, unemployment is low, and so on. But the housing market, as you know better than most, is not doing particularly well. And what I've said in the past is that we're experiencing inverse or reverse COVID. We did really well during COVID, along with several other states, and all these states are now turning around and doing relatively poorly. This is very beneficial for buyers. So go out and tell your buyers this is a great time to look for a property, especially a multifamily property. That's really important. And Tampa, as it happens, is doing a little weaker than most other places. According to Case-Shiller, your decline year over year has been 2.4%. And of the metros they follow, that's the worst performance. So again, the deals are strongest where you are. Encourage buyers to take advantage of this. I think the price declines continue for a while. When you see prices go up, they go up for a long time. When they go down, they don't go down for that long, but they do go down. And I want to close by reminding you that even if we have more price declines, they will not resemble the price declines we experienced in 08-09, the housing bust. This is a very different and much healthier housing market.